Hello, welcome back, traders. Welcome to AlBashir FX, your home for market review and determination of what the days that will be. So, on today's episode, we're gonna look at the weekly forecast and the daily forecast all together, since today marked the end of this week, being Friday. Today is Friday 10th, 2025, and I'm recording this video midnight Nigerian local time. So we have before I begin, if you this is the first time you are stumbling on this channel, do well to subscribe, like and share the do so to subscribe, like, share and comment. Tell me what you think about the market and I will surely respond to you. So thank you so much. God bless you as you support my journey for growth. So on today's episode, we are going to look at to where this next week, where we want next week to go, and also we are going to analyze this week that was and how price actually used the week from the lower time frame to the higher time frame. So this episode is going to take a longer time than the usual daily market review. So let's dive into what we have, and this is the US dollar index, the DXY, and I'm using TVC now. So if on the dollar index we seen that price reject lower open, which is the previous this week that just ended, the week that was, market jump higher, create a volume imbalance here, and then reject higher and continue to price higher. We've seen and we have all experienced this buy side delivery for the dollar index and the momentum the price takes for this whole week. Now, aside from that, we see that the market has make this down close candle be a weekly bearish order block, sorry, bullish order block, and also we price has rally above this um, previous week, which is the Monday 2022 September 25 week candle. The candle week, which is what I mentioned, I want to see, this is my PDRA or key level as you might like it on the weekly time frame. This is the key level I am looking for price to have effect on price going in next week. This is a candle week, and I've marked the upper quadrant and the lower quadrant, the consequent encroachment, and 50%, which is the consequent encroachment. So the blue line represents the 50%, the other yellow line below represents the lower quadrant, and the lower line above represents upper quadrant. So which is, I represent it as UQ and LQ, then SCE as the consequent encroachment. Just if you want to know how I analyze. Now, if we do the same thing on this candle week, I want to show you guys, because this is not just us analyzing, we're also bringing a light information for you guys. Now, if we apply the same thing that we want to apply here, we apply it here. We've seen how price reacted to it. That doesn't mean because this candle weeks, we have a candle week, we are expecting price to not respect it and continue to go lower, but we want to see how far the market is going to extend within a specific time frame. So now, if you understand that the use of a candle wicks earlier, you would have known that this rally higher will definitely be rejected at the 50% or below the 50, above the 50% or below the 50%. Now, the rejection comes in the fact that we have reached the consequent encroachment of the candle wick, and as the theory says, when we reach the upper quadrant, and if you look at, this is the upper quadrant area, price rejected and delivered lower, and we close above. Now, as we close above the lower quadrant, right, as we close above the lower quadrant, what does that signify? That signifies that this is a bullish price action, right? This is a bullish price action, but it just has to reject lower and close below. And if you look at this lower quadrant, if you watch how price keep using it and rejecting lower, use it to reject lower. Now this was another criteria that result to these multiple price swings that we see on the weekly time frame. So now I will leave this on and I will take it on our alright, I will leave it on so that I can use it to explain some certain factors for you on a lower time frame. Now, if we compare that with this weekly, which is the next week, we have the upper quadrant, which is this yellow line and the black line above, and the lower quadrant, the yellow line and the black line below. So if we have this scenario, we want price since we are still anticipating for higher prices. That means I am looking for price or anticipating that next week we open and we price into the lower quadrant, sorry, the upper quadrant, and wait, I don't want to price, I don't want to see price trade below the consequent encroachment or below the consequent encroachment, as long as since we have lower time frame PDRA that also supports this candle wicks projection. So we go to the daily time frame and we're going to use this parameter to determine where we anticipating for price to go. Now this is going to get too much for you guys to assimilate, and so that the lines on my chart will not confuse you confuse you. Let me just explain this so that I can take this off the chart. So we see how price rally into the 50% of the candle wicks I just showed you and reject the lower. We close into it, tap below above it and reject lower. And now if you watch how price reacted to the 50% which is the lower quadrant that take us to the 50%. So this has a very significance in price according to my mentor and even proven by the owner of gap theory. So now we have seen that market on the daily time frame, we've seen that market reject lower this Friday, which is the especially today that we are going to actually look into vividly. We see that price close below, we have a down close candle, very impulsive compared to the strength that price was showing consistently from Monday market. Now this represents our candle wick that we are projecting to continue price. And if you look, I don't want to blur the chart much. We have a daily inversion fair value gap. This is the daily inversion fair value gap high, which is this green line. Let me make it double, now turn it back to what I actually prefer so that you guys can see it. So yeah, this thick green line represents you can go and find it on the DXY, represent the daily fair value gap. I decided to leave only the high because the low and the upper quadrant of this candle with consequent encroachment are actually the same, so I don't really need to put much on my chart since I can easily find that. Now, since we are anticipating for next week market to be bullish, but we are very sure that we are going to have maybe Monday and Tuesday being a down close candle that will take us into this PDRA. And if you look vividly around this area, we have a bullish breaker, which is this particular candle is a bullish breaker, and yeah, which also supports the idea that this candle with consequent encroachment is going to take us higher. And with the candle with consequent encroachment, we can actually know that the market will not take the full range of uh this bullish breaker, and we might just use the upper quadrant of the bullish breaker and not reach the lower quadrant of the bullish breaker, and also in conjunction or in correlation with the weekly candle wick consequent encroachment and the upper quadrant. Then we have our daily inversion fair value gap. Now we also know that on the way I trade, or the way I look at the market, because there is something I want my traders to understand, is that every traders, the way you trade or every strategy is just an illusion that program your mind to look at market in a certain way. So all you have to do is that find the one that suits whom you are, and the one that the the way you the one that helps you more to be more profitable, right? The way you look at the market, right? The strategy that help you to become more profitable, you just focus on that, refine that, and build your home with it, right? So you don't have to be looking for strategy up and down, because every strategy is just an illusion to program your mind to look at the market in a certain way. Right, just like I am doing now, I'm looking at the market, calling out these vivid points, and some of you might be like, this is crazy, right? Yeah, it can be crazy, but this is just the way I have programmed my mind or my eyes to look at the market, right? Am I making money with it? Yes. So you cannot convince me that what I'm doing is wrong, as long as I'm making money with it and I can see the progress with it. So that is all I need, to justify my own way of trading. But yeah, trading, or all these strategies, all these mentors are just coming up with an illusion, right, for you to look at the market in the way they look at the market too, right? But you can, I believe that one at some point, with all these that I have and with what I'm putting on my journal, at some point I might come up with a more specific way that resonates with whom I am, more specifically the way I will be looking at the market, and it will be more resonating with me, right? Because I'm still growing. Yeah, because you will not imagine, you will not spend a full trading 3 5 years to 4 years, 4 years to 5 years fully trading. Imagine you just spend days like that trading. You would know that yeah, it's not easy, and you will be able, with those time and the experience, you'll be able to carve simple things that suit you. So I also love the perception or the illusion of CRT. And if you see, look at my video description, I told you guys I'm a CRT trader as well, but I'm an ICT trader before a CRT trader. So yeah, I like the perception of how to look at the candle in terms of range, right? Just like we are looking at this candle week in terms of range. So that is all I have to say, and thank you. Don't forget to subscribe and like this video, and also comment on this video. So now if you will look at candle in terms of range, in terms of candle range, we want to see this particular candle be our CRT candle. Now I have come to the point where I want to see a CRT candle, now meaning that this particular Thursday candle, the low will be our CR candle range low, and if we break below the low, we have a key level. Now we have various key levels, meaning we have many key levels lying below the Thursday candle low. We have the inversion fair value gap, we have the bullish breaker, we also have the candle wicks upper quadrant that we also support price. And don't forget, this particular day, which is the Monday and the Tuesday, can deliver an efficient price, and we have a smaller fair value gap here, this candle high and this candle low, right? This is a smaller fair value gap, and also the fair value gap is in junction with the upper quadrant. That's why I did not bother to add it on my chart. So this make more perfect logical sense why price will reject around this area and go higher. So what am I on a daily perspective? What am I looking at on DXY? So on a daily perspective, I want to see DXY. Hey, 33%. On a daily on a daily perspective, I want to see DXY Monday contract open, right? Trade lower into this area and reject higher. Then the Tuesday, which will now be from the low of the week, will take Monday low and reject and have a candle in form of what, a rejection block. What I mean by rejection block, if you understand your candle, you know what I mean by rejection block. Now a candle that has longer wicks low and a shorter wicks high, so I'm looking for the perfect one. So we have one here. This particular candle will rally lower and reject upward fast. So if we have something like that on Tuesday, then we anticipate for Wednesday continue Thursday continue, and Friday will also be the close. Now, how far can we go? We have this external range liquidity. So if market is going to continue to become more impulsive, we're going to see that. And also there is something that comes to my mind, that the next week might be ranging, right? We might be ranging between these candle consequent encroachment and the upper quadrant of, sorry, and the lower quadrant of the order, which is the one I just deleted, the consequent encroachment of that one I just deleted. So we might be ranging between that area, and the market will have a accumulation week, and also it will create a fair value gap on a weekly time frame with this week low. So we don't know that yet, right? So let's see how the market will actually played out. So on a 4 hour time frame, right? So we see this perfect, right, turtle soup that we mentioned, and the areas we have mentioned that I'm looking at for. On we also have a smaller time frame, which is an hourly time frame order block, which is a bullish order block, and also in upper quadrant or upper quadrant of our candle wicks, and also in junction with our daily inversion fair value gap. So we have so many PDRA that support price. And also if you look at, if we think about price becoming bearish and taking us lower, we have this fair value gap, which we should anticipate for price to use this fair value gap to rally, or it might open, go higher, use this fair value gap, then continue to come lower and reach this level. So Monday is not going to do much. If Monday is going to be an accumulation day, then Tuesday is going to do exponentially well if the expansion is going to continue immediately. Otherwise, if Tuesday did not do exponentially well, that means the week is likely to be an accumulation week, right? So that is it for the dollar index. I normally spend more time on the dollar index so that I won't spend more times on the rest of the pair, because the dollar index, if you understand the dollar index, then you have already beaten 40% of the 50% of any other pairs, whether DXY, GU, and Bitcoin even. So now let's go to the EU, and let's first of all go to the weekly contract. So similarly on EU, we have our previous candle week like this, and now this is our previous week, which is this week that is a bullish week, right? Is an order block, right? So there is a tendency that price might not reach this week. Now this is where our fair value gap, or our weekly fair value gap, will comes in. There is a higher tendency that this next week will not deliver all the way and form efficient price with the previous week, which is this particular week. It will not form an efficient price with this week. It will only price higher into this lower quadrant and deliver lower impulsively, or accumulate around this range before next upper week use the fair value gap and also tap on the order block for us to continue, right? But this is just a projection on price, which doesn't mean that price has to go like that. But if you understand and you have a basis going into the market, that will help you so much during the trading hours, and or during your execution. You will know exactly what to look for and what to avoid, right? When to actually participate and when not to participate. So we have this our candle wicks projection already here, and this blue line also still represent our candle week consequent encroachment, which is the midpoint of the week, the lower quadrant. So we want to see price remain between the lower quadrant and the consequent encroachment of that candle week going in next week. So that is it for the weekly contract. But if you want to know exactly why we still bearish, let's go to the monthly. I decided not to go to the monthly on the dollar index, right? Not to waste much of our time. So, and again, you know that I only did trade Euro US dollar, and I swing trade the rest of the pair. Now we've seen the monthly time frame. If we look vividly on the monthly time frame, we have a CRT candle here, and on the CRT candle we have gotten to the 50%. Now this has come to a point where price might accumulate, right? If you understand CRT very well, when we get to the 50% of the level of the CRT, there is a tendency to accumulate, or a tendency for impulsive move, a continuation of what impulsive move. So we are anticipating for price to reach for this external range liquidity on the monthly time frame, and we have seen the monthly have kickstart. And next month, if this month did not take us all the way down to this level, that means there is a higher tendency next week is going to accumulate. Otherwise, next week and next upper week should take us below this external range liquidity, which is our target. The TG and the TS is the turtle soup, right? External range liquidity plus turtle soup, that means the market turtle soup here and reject. So we have this particular candle, and if we measure the 50%, we have price has already reached the 50%. Why you should not still continue to expect gigantic price move, that is impulsive price move, and you should pay more attention to what price is actually doing and what is illustrating. So just like I've explained on the weekly contract, our highest expansion, we still favor previous day low, which is we don't even want this high, this market to reach the high. So the most logical draw on liquidity we have is this internal range liquidity plus target. So which is the previous week low. We are still anticipating for this previous week low to be seek for. So after knowing that, let's go to the daily time frame. So on the daily time frame, we have this. Now this is where I was saying that if we are going to have an accumulation week, it is going to be between this inversion fair value gap and this inversion fair value gap. We have inversion fair value gap, and if you watch our video yesterday, I did mention the importance of this inversion fair value gap, and we see how price treat it even on a lower time frame and up to the higher time frame. Market has break above it, just like we traded below it. Market has traded above it, and we have another one here, and we have our weekly um candle wicks. We also have them around here, which also in line with, let me show it so that I can explain it. I don't want it to be on a lower time frame, since it is my main key level for the higher time frame, right? This is a key level for the weekly time frame. So if we go on a daily, we also have it here. So now this is why I put it. I do not want to, because I already know it often. So where it is, where it is. So now the inside the inversion fair value gap that we have, the upper inversion fair value gap, this is the lower one. So what am I anticipating for is Monday to open, and the low of Monday should be, if the candle is going to have a significant low, right? Because some candle will open and there is no low, just like we open and there is no high on this candle and we continue to go lower. We might open and there will be no low and we continue, but if we are going to have a low, the low should at least tapped on this inversion fair value gap, use it as a support to go higher, and our first expansion or first target will be this high, and the second target will be this high as well, right? So on Tuesday, then we're going to be anticipating for a rejection candle, just like similarly this kind of candle that happens on Wednesday, that traded higher, takes both the Monday and Tuesday highs, relative highs, then reject, and also we price into our candle weak consequence engagement, and also the lower quadrant of our inversion fair value gap, and also this bearish breaker block. So we have so many PDRA on the daily time frame that support our bearish move, and if price traded on Tuesday or Wednesday below this inversion fair value gap, then we will now have no business expecting price to reach up again. Then we can now support that price to use this inversion fair value gap as a resistance since we are treating it as a support now, if we break it below, it should use it as a resistance to take us lower and furthermore to our external range liquidity. So if we go on a lower time frame, which is the 4-hour time frame, now this is the effect of this inversion fair value gap, including this effect. Look, markets use this week. If we look at the week in terms of the 4-hourly contract, the week we open here, okay, sorry, the week open here, which is the Sunday candle open, market breaks below, we respect it, market breaks below it, reclaim it, then break above, then we use it as a support, sorry, as a resistance, and trade and use this one as a support, trade higher, then break below it, then we use it as a support here, then break above it. Now, just because we have all these things on our chart doesn't mean as soon as price get there, price should reject and continue to go the other way. But with it on your chart, it will help you be more conscious about how to analyze this market and how to anticipate for any form of reversal or any form of a change in the state of delivery that is coming in, and you'll be able to position yourself for a good proper setup, right? Proper entry and exit. So we, on the lower time frame, we are anticipating for, which I'm anticipating for markets to open, we have a smaller time frame fair value gap and order block on a low on a 4-hour time frame. So I want that order block to be rejected, and price, you use this as our weekly turtle soup, then reach for this inversion fair value gap, then use it to deliver lower, reject a little bit and goes up, then continue to go lower. So this is what I'm anticipating for on the euro US dollar. So if we go to the um to the GU, right, weekly contract, so this is the GU weekly contract. Similarly, on GU we have this our candle week consequent encouragement. Now I didn't put this on GU because I know we are very close to a very significant bearish order block, so there's no need to be struggling with marking out that area, since we have more significant PDRA that is more significant than these candle wicks, right? So we have a bearish order block that's very close to current price, so which I am anticipating for price to reach into, which is the bearish order block, form efficient price delivery with this candle, then deliver lower, which is going to create an SMT divergence with EU, right? So this is as simple as that, and our target will be this internal range liquidity. Sorry, it's not external, this is supposed to be internal range liquidity plus target. So that is what I am anticipating for on GU. On GU, weekly perspective, weekly time frame. So we want to see price reach this level, reject and go lower, and seek for sell side liquidity. So on a daily time frame, yeah, I have put annotation here already explaining it vividly. So we have, similarly, we have inversion fair value gap here, and we have inversion fair value gap above here, and we've seen how price respected this one and also respected this one. So, and we just price above it and close above it, and yeah, we see the close is very even close to it. So we open, we're gonna anticipate for price, which is on Monday, I'm gonna anticipate for price to use this level to go higher. Then if you're gonna engage for a buy setup on Monday, you should make sure you take your profit before price gets to this bearish order block, because there is a higher tendency, if we get to this bearish order block, you cannot take any position. Now I am not the trader of GU, so of GBP, so I'll be waiting for GU to reach this sell area. Then when I see a reasonable lower time frame, maybe 4-hour or an hourly time frame change in the state of delivery, then I'll be taking a sell, and I'll be anticipating for this internal range liquidity as my target, or this external range liquidity, as the case may be, if the market is moving more impulsively. So on the 4-hour time frame, we also have similar effect on price, So we have a bearish order block that has already been tapped and already been used, right? If you see, market has already reached the 50% of that bearish order block, and yeah, which already determine its usefulness, and we reject. Look at how price respect this inversion fair value gap. Look at the open. The open is above the high, and the wick is inside the 50% of that inversion fair value gap. Look at how the market also respect it here, and look at how the market also respect it here. Look at how we respect it today, even today, before this delivery. So this has shown, and also we see that this is a smart money divergence, which I failed to notice on GU today, right? On euro US dollar, the euro US dollar did not create a lower low, but GU create a lower low, which is very significant, right? So this is a smart money divergence, SMT. So let's go to Bitcoin, and once again, before I start to talk about the Bitcoin, right, let me urge you guys to once again try to subscribe, like, comment, and share this video with your fellow friends that are traders. And yeah, God bless you. Thank you so much. Now, finally, last but not the least, we have our CRT again here, which is our CRT candles here, and we have seen that market reject, and the the trade that we were anticipating for, look how price just delivered overnight, just within today. I don't know, but the Trump imposed another tariff on the on China, so which has result to this gigantic move, and other some factors, right? So because yeah, that is just it. I can't even know all the factors, but yeah, the thing is, if you are a technical analyst and you know what you're doing, before all this kind of stupid thing happens, the market already tip its hand to you if you pay attention clearly. But will you be able to know these kind of big moves? No, I'm not sure you'll be able. So what are we looking out for next week? So let me go to the weekly time frame. Sorry. So on a weekly time frame, what I would like you guys to pay attention to is this candle close. This is a bearish order block now. If this candle close below, but if we close above, that is, if we close at the midpoint, we did not have a close below. We still have 1 day to 23 hours, so we start like 2 days, which is Saturday and Sunday. So if Saturday and Sunday take us above this level, that means there is a higher tendency the BTC is going to continue, and all this is just to take liquidity and continue. That means this is even a thought soup, and price will continue going higher, right? So but if we close below this level, that indicates a long time bearishness on Bitcoin. So we're gonna wait for how we close, and the way we close will now determine if we are going to expect a continuation lower or a continuation higher um on the Bitcoin market. So also on the daily time frame, we have this. See our very shorter block here, and we have our efficient price delivery, right? This is a fair value gap here, and this is a fair value gap here. So I would like to see price form an efficient price delivery with this in volume. That is for price to cover this volume. So if price cover the volume, that will make it more strong for us to expect continuation lower on price. So this is mainly what I'm anticipating for on BTC. But if we go to the 4-hour time frame, the trade that I was telling my community and those who have subscribed to this channel earlier before now, I have been telling you guys that I was anticipating for a bearishness on Bitcoin, and this is the trade we took. Yeah, and the result was shared on the Telegram channel, and this was our target. which is 50% of this range. So I never knew that market is gonna do this Gagati Gumo. But anyway, this was another perfect sweet trade that didn't even take much days, just 2 days to deliver. So I hope this episode made you well, and I hope you learned something from this one today. If you do, then subscribe, like, and share. See you on Monday. God bless you. Have a nice weekend.